Good evening, Deepak. Welcome. Nageshwari, welcome. Good evening. Vishnu, good evening. Aditya, how are you? Deepak, welcome. Prasant, welcome. Rahavendra, welcome. Dikshna, Shankar, Aditya. Yes, I'm fine, Aditya. Bala Subramaniam, welcome. Varun, good evening. Yes. Because our mic is in mute mode, it seems. Kindly change.
Yes,
Yeah.
yes.
Okay, sir. Divya, welcome, Kana. Yes. Good evening, my dear students. Welcome to Premier Academy webinar series. Our Vikas Oswal sir is there. There is no need for introduction. All over India, the best faculty for auditing. Getting appointment from Vikas sir itself very difficult. Thanks to Corona, it's little easy for us to got the appointment from Vikas Oswal sir. Today's session is Standards on Auditing 560 with respect to subsequent events. You know, in general, we used to prepare the financial statement from 1st April to 31st March. After finishing the financial statement, financial year over, chartered accountant, as a chartered accountant, we used to prepare the financial statement. But the signing date, audit report, may be assumed on June month. 31st March, in mid of 31st March, nobody going to sign. So there is a gap between 31st March year end as well as what signing date. June month is a report is going to sign by the chartered accountant. Thereafter, April, May, and 2 plus 2.5 months might be gap will be there. In that 2.5 months, any event occur, will it form part of, will it have the impact on that previous financial statement, or we have to transfer to next year financial statement? That's the biggest confusion or question mark. We can take this as an example. Up to March month, our situation is comparatively normal. April month onwards, complete shutdown. So many business got affected and a huge loss incurred by the company. Today, if you are going to sign the financial statement, whether you have to give, even though still 31st March, everything is okay, profit is there for the company, whether you have to give any report or opinion, or whether you have to alter the financial statement, or whether you have to disclose, in what form we have to convey to the shareholder or stakeholder. That's a big question mark. Will it form part, or even the Corona will form part of subsequent events? Not only that, because of complete lockdown, many cases we used to see in the media also. Because of lockdown, fire has happened in the godown. That loss, whether he'll form part of this particular SA 560, or malls and all, theaters and all, rat has spoiled all the seats. It's a flash news in last month, very well. These are all the loss incurred by the company or entity. How it is going to affect, what are all the treatment? That is what standards on auditing that sir has going to explain in detail. Welcome, Vikas Oswal, sir.
Thank you, sir.
Directly to us now. Please, sir.
Thank you. Dear soldiers and my good friend Hari sir, it is a pleasure to come on the platform on Premier Academy. Premier Academy is always about learning, understanding the subject, and also helping the students. This is one thing about Hari sir, that he goes out of the way to help the students. And he requested me, sir, relevant topic this time, what can be actually for students for examination purpose also in the current scenario. So we chose this topic of SA 560 subsequent events. My dear soldiers, SA 560 subsequent events. What are subsequent events? Events which occur after the date of financial statement and before the date of audit report. And any event which occurs after the date of audit report, they are considered as subsequent event. I repeat again one more time. Any event which occurs after the date of financial statement, but before the date of audit report. So, as Hari sir rightfully identified that, see, we close the books of accounts on 31st March. And after we close the books of account on 31st March, my dear soldiers, what happens? The First of all, the management will take steps to prepare the financial statement. Once the financial statements are prepared, yes, the audit also starts. And then once the audit is completed, but before the issue of audit report, the financial statement first it is approved by the board of directors. So once it is approved by the board of directors, so what happens? We as an auditor has to issue an audit report on such financial statement. And then that financial statement should be made available to the shareholders. Shareholders are the owners, so the shareholders should accept the financial statement. They should adopt the financial statement at a annual general meeting. Once the shareholder will adopt the financial statement at AGM, then, my dear soldiers, the filing has to be done, must be done. Filing has to be done with the regulatory authorities, like say ROC. So you need to do the filing with the ROC. This is how it flows. So once you close the books on 31st March, say by April end, the financial statement is prepared by management. Once the financial statement is prepared, auditor will start the audit. Audit is completed. Auditor will give his suggestion, but he will tell these changes to be done by the management. Management will make the changes. Board will approve the financial statement, and on that financial statement, the auditor will issue the audit report. And then that financial statement and audit report goes to shareholders. They adopt it, and then it is filed with the ROC. So this entire process takes almost 6 months. 6 months, almost like say 6 months it will take. Or sometimes what happens, some auditors are requested by the management that in the March month itself you start the audit. And whatever entries are there for the March month, it can be checked on April. So sometimes the audit also goes in that particular direction. But what happens between the March end until the financial statement is approved by the shareholders is something we should be concerned about. Because today, nowadays, it is a volatile times, my dear soldiers, unpredictable. I always tell one thing that uh, man plans and God laughs. We do a lot of planning in our life, but sometimes what happens, my dear soldiers, something else happens. That's the thing about the life actually. Today I was thinking in morning to do some work actually here related to my office, but I had to rush to my friend actually to meet him because he was under some severe problem and other thing actually. So morning I thought that okay, I will do some office related work, but I had to cancel the meeting and I had to do what need to help my friend. So what I'm trying to make you understand that we do a lot of planning, but something else happens. Sri Ramachandra. See, subsequent event concept was brought in 100 years back. It is not a, like say this concept was not there beyond 100 years, but within 100 years back, say almost like in 1920s, this was the concept which was brought in. See, the same concept you learn in IPCC level as AS4, events occurring after balance sheet date. Generally, a financial statement comprising of P&L and balance sheet, it is a summarization of economic events. Sale has occurred, purchase has occurred, salaries have been paid, rent has been paid. We summarize that. So, for example, if I am doing audit for the year 1920, I should be focusing on transaction and events of 1920. But what happens after March till the financial statements are adopted by, say, shareholders? Say, for example, annual general meeting will occur on, say, September, 6 months gap. In the 6 months gap, what happens? That is what you need to look into. That is why they brought this concept of subsequent event. For CA final level, you have Ind AS 110, that is events after the reporting period. So events after the reporting period, that is Ind AS, my dear soldiers. So that particular standard talks about this actually. Yeah. So Ind AS 10. So basically, what happens, my dear soldiers, that this is not only relevant for our, like say, auditing paper, but also it is relevant for even our financial reporting paper. So I was telling you that 1920s was the first time they brought this concept, an aspect of subsequent event. So in 1920s, there was an auditor called Arthur Anderson. So this Arthur Anderson, my dear soldiers, what he was doing, he was more into, uh, he was more into, like say, he was doing the audit of various entities he was doing audit. And one of the audit he was doing was a shipping company. Now, the shipping company in 1920s, they had four ships. They had four ships. So fine, he was doing audit. After he completed the audit, but before he was issuing the audit report, what happened? One of the ship got sunk. So there was a gap between the balance sheet date and the audit report. The 3 months gap was there. In the 3 months gap, one ship got sunk. Now, as on balance sheet date, I have four ships. But what happens, my dear soldiers? Subsequently, I am left only with the three ships. So Arthur Anderson said, no, no, I need to make a reporting of this. This reporting has to be done. Otherwise, what will happen? So he decided that, okay, he will do the reporting. And he made a very clear cut thing that the reporting has to be done. Otherwise, my dear soldiers, what happens? How do we go about it? Actually? So they said, okay, we need to do the reporting. We must do the reporting actually. So he was very clear that a reporting has to be done. So he spoke to the owner of the company. Owner of the company said that one ship got sunk. Okay, it happened after the balance sheet date. Why are you bothered about something which has happened after the balance sheet date? Why are you bothered about that thing? So he said, see, sir, it is not like that because as on the date when the shareholders adopt the financial statement, they will be under perception that the company has got four ships, but actually you're only having three ships. Sir, let us not do this. Let us make a disclosure to the shareholders. Have you gone mad? The client asked. See, anything new in this world will always be challenged. You do something new, people will always comment on you. There'll be out of 100 people, say one person may appreciate you, and say 99% may make fun of them. In fact, I'll tell my experience with Hari sir. Hari sir used to always tell me, sir, we should conduct tests for the students. Another thing used to tell. I said, Hari sir, what is it? I mean, in fact, he was the first pioneer to even talk about the test series. They say, okay, let us conduct the tests for the students. After every chapter is done, the test has to be done. I questioned, sir, what will happen? Let the student go and study. But his concern for student was so high that no, 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 we should conduct the test series. And today I have also adopted that scheme, and it's all because of Hari sir. So what happened? Any new idea will be ridiculed. Any new thing will be questioned. When you swim in the opposite direction, everybody will question you. Arthur Anderson was also questioned. He said, "No, no, no. You are looking after the balance sheet date, which is not correct." But what Arthur Anderson did, he made a reporting. He said, "No, I am going to report. That is it. I will be making the report, and it is not correct that if I don't report, it is not correct." So Anderson reported, and as usual, what happened, my dear soldiers? The shareholders they got to know the information, but he was removed as an auditor of that company. He had to pay that particular price. People ridiculed. But today, my dear soldiers, after 100 years, almost 100 years have gone. Today, the relevance of subsequent events have gone up. Have gone up actually. For example, say so many cases I am hearing. For example, one of my client came recently. He has a wedding hall, a huge wedding hall. Now, wedding hall is like lying empty from past 3 months. He said, sir, what shall I do actually? I'm running maintenance cost itself is very high. He's putting it on sale. Restaurant is on sale. So what is happening, my dear soldiers, that as on the balance sheet date, they will tell, okay, everything is all right. But after balance sheet date, because of too many scenarios coming up because of COVID situation, that's a thing. And mainly, I observed that these guys have taken huge amount of loan to start their businesses actually, and they are not able to pay the interest. They have put restaurants on sale, marriage hall on sale. These kind of things are happening. So subsequent event is something like say, okay, he's taking a decision to liquidate the firm, close the firm. What shall I do actually as an auditor? I have to highlight this matter to the shareholder. No, 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 till 31st March, everything was all right. After 31st March, this thing happened. Don't bother. How can I not bother? So COVID scenario has changed the game ball for everybody, my dear soldiers. Everybody. I mean, many businessmen they have taken huge amount of fundings. They say we can't run the business. We have made interest as our partner, and we are paying. We have to pay a huge amount of interest. So this kind of scenario. That is why our audit is not restricted to say April 2019 to March, like say 31st March. It goes beyond that. Whether anything has happened after the balance sheet date which affects the position of the company, whether it is your duty as an auditor to make a disclosure. Now the question comes, sir, who is responsible to disclose the subsequent events? Whose responsibility it is? Sir, you're telling about subsequent events, so I think it is the auditor's responsibility. No, sir, no. It is the responsibility of the management and those charged with governance. It is their responsibility to highlight what is a subsequent event. It is their responsibility, my dear soldiers. So it is not the auditor's responsibility. What auditor has to do? He has to obtain sufficient and appropriate audit evidence about the events which has occurred after the date of financial statement, that is balance sheet date, and before the date of audit report. Whether these events requires any adjustments in the book. So do they require any adjustments in the financial statement? Should I do an adjustment or should I make a disclosure? So thereby, if you read the standard, my dear soldiers, what happens? There are basically it talks about two types of events, two types of subsequent events, that is adjusting events and non-adjusting events. There are two types of events, it is adjusting events and non-adjusting events. What is an adjusting events? Adjusting events, my dear soldiers, are those events which provides a condition that the situation existed as on the date of financial statement. It provides an evidence that the condition existed as on the date of financial statement. As on the balance sheet date, the condition existed. Sir, we did not understand, sir. Sir, please give us a example. Let me throw an example for you. Soldiers, what happens? Say, for example, the client has to receive, say, 5 lakh rupees as on the balance sheet date from a particular customer. The client tells in the month of February and March, "Arey yaar, this customer will not pay me money. I have something I have in my mind that this person will not pay any amount of funds. He will not pay. So I strictly have a doubt that this guy is not going to pay." When he makes that statement, my dear soldiers, what happens is that he is giving you an indication that as on the balance sheet date, this amount may not come into picture. Sometimes, you have this deja vu feeling, or like say instinct. Sometimes your instinct are so strong about some people that they may pay, they may not pay. That's the thing. So that sometimes these instincts are very, very strong, my dear soldiers. That's the thing actually here. Okay, this is the one thing, my dear soldiers. So now what happens? I was aware the money may not come as on the balance sheet date. After the balance sheet date, the person became insolvent. The person becomes insolvent. What you have to do? You should make a provision for bad and doubtful debts. Yes, a provision for bad and doubtful debts has to be made. Now this kind of events existed as on the date of financial statement. It existed for 1920 audit. This time, my dear soldiers, every eye will be on the accounts receivable account. Every eye will be there on the accounts receivable, because now many people are raising their hand. We can't pay the money. We can't pay the money. Everybody is coming for what, come on, my dear soldiers, for negotiation. Example, if you're a landlord having a property, the tenants are coming and telling, we can't pay the rent. Give us discount, 25% discount, 50% discount, and even landlord are also giving discount. They are also understanding that the condition is really very bad. So now on accounts receivable this year, a lot of provision for bad and doubtful debts will be made actually here, because the receivables are in a very big question as on today. Just I think a week back, I got a call from a client. Client said, I have a customer. He is running an advertising agency. The advertising agency, so they provide a lot of services. So for example, I'm a person, I'm from Apple, and I say I want you to advertise Apple product in Bangalore. So this guy, what he will do, he'll put the banners, he will arrange people, and he will do all this kind of advertisement activity. For that, he is paid. Okay, this is just an example. Apple was also just an indicating example. It's not the actual product he deals with. Now, the person, the customer, he did a job for the customer. The job was done in the first week of March, everything was done. Now the customer says, no, 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 you straight away give me 30% discount. Straight away, customer himself is saying that you give me 30% discount. You want the payment now, give me 30% discount. Otherwise, see what will happen. We dominate the customer, we provide the service. They say, give us discount. And now he said, you want the payment now? Okay, 30% discount you give me. And if you want the payment, okay, after the situation is over, okay, I'll give you full payment. Let the situation recover. When the situation will recover, anybody is clear? Nobody is clear, my dear soldiers. Nobody is clear what is going to happen. Sri Ramachandra, when there is no direction, when we are walking the dark alleys of the life, only we have to believe in God, my dear soldiers. That's the thing. Yes, you have to do your own karma, but at the same time, strong belief in the God that yes, some way we'll take a right decision. So now what has happened? The customer, my client has agreed. Okay, no problem. 30% discount. You give the money. Now these kind of scenarios are coming up because of the COVID scenarios. COVID scenarios is changing life before COVID, and now it is during COVID. It is during COVID as we are now, my dear soldiers, and life after COVID. After COVID, whether it will be a better people, my dear soldiers, we don't know. At least it should be a learning for us. This is the first time when you look at another human being, you're getting scared. That's the thing. Somebody, for example, in my office, I'm sitting nowadays, I go to office, I sit there, suddenly somebody comes. So first we look at the person, even if it is a client, we look at the person and then we talk to them. 1 minute is like a, okay, check his temperature, another thing. So what I'm trying to tell you, the scenario is that scenario has completely changed, and subsequent event is one thing which an auditor should highlight. So there are two types of events. One is an adjusting event. The other one is a non-adjusting event. Adjusting events are those events which provides evidence that the condition existed as on the date of financial statement. Whereas non-adjusting events, my dear soldiers, what do you mean by a non-adjusting events? A non-adjusting events, my dear soldiers, understand that a non-adjusting events are those events, my dear soldiers, which provide evidence that the condition arose after the date of financial statement. After the date of financial statement, it arose. So, as an example could be like this shipping company, Arthur Anderson. So, shipping company, as he highlighted, my dear soldiers, that there were totally four ships, and totally there were four ships, my dear soldiers. And after that, what happened, it became what, come on, my dear soldiers, so after that it became what you can say, it became, my dear soldiers, that okay, like say one ship got sunk. So as on the date of financial statement, my dear soldiers, you see that there was no situation existing, there was no condition existing. Who will imagine that a ship will get sunk? Nobody had a doubt, and a little iota of doubt also was not there that the ship will get sunk. Okay, so they did not have any such kind of scenarios as on the balance sheet date. But after balance sheet date, they came to know. Now this is a non-adjusting event. In a adjusting event, you have to make entries in the financial statement. Example, if I am doing audit of 1920 and after April 20 some event happened, which is an adjusting event, then in such case, I need to pass entries in the financial statement of 1920, like provision for bad and doubtful debt. I need to pass the entry. That is a adjusting event. Whereas, my dear soldiers, non-adjusting event is something you make a disclosure. You just make a disclosure of a non-adjusting event so that the user of the financial statement can read those disclosure, so that the user of the financial statement can take proper decision, so that the user of financial statement will not have any kind of misleading information. We will tell, oh, condition in the company is very good, superb, they have an excellent cash flow, but after COVID situation, scenarios may change. You imagine situation of companies who have only one customer, and that one customer is not able to pay the money. What will happen? They have only one customer to deal with. Imagine the scenario. And that is why, my dear soldiers, subsequent event is something which is a very relevant factor for our discussion. Okay. Then the objective of the standard SA 560 is what? As an auditor, I need to obtain a sufficient and appropriate audit evidence for events which occur after the date of financial statement and before the date of audit report. And I should also obtain sufficient and appropriate audit evidence for events after the audit report date, whether it requires any amendment to the audit report, whether any kind of amendment is required to the audit report. Even those things are also questioned here, my dear soldiers. Okay, so whether any kind of amendment to be done in the audit report, these two things are to be highlighted actually. So what Arthur Anderson has done, he has paved a way for, like say, for a shareholder to know that what is going to happen between these 6 months. So they will have a clarity, oh, this is what the situation has happened, and we should be aware. Otherwise, 6 months in this volatile scenario is a very big period. If you don't disclose, what is going to happen? It is going to be a challenging situation. Now, as an auditor, what are the steps we should take up? First of all, obtain the understanding of the procedures followed by the management to identify the subsequent events. What is the procedures you are following? What procedure management is following to identify the subsequent events? Then, second one, read the minutes of the meeting of the shareholders, and also look into the interim financial statement. Now, example, say I'm doing audit of 1920. Now, 1920, you will have the June quarter. So first, you have the June quarter. So in such case, my dear soldiers, the June quarter, you're coming across the June quarter, my dear soldiers. So when you come across the June quarter, my dear soldiers, the June quarter, like say it will come across that scenario actually. That, okay, you're coming across the June quarter. Now, June quarter, you will prepare a interim financial statement. In that, you'll disclose some transaction and events which may be relevant for the preceding year. So you have to read the minutes of the meeting of the shareholders, read the interim financial statement. You have to read all these things. All these things you should be reading it actually. Okay, so these are certain pointers, factors you should be very clear with. Okay, so as an auditor, yes, a discussion with the management, inquiry with the management and TCWG, they are the best people. In fact, talk to the accountants of the company, make friendships with them, actually understand what is going on currently in the company, what are the decisions they are going to take up. So it's very, very much important that you come to know what is happening in the company. In fact, we were doing an audit of a software company. A software company, I was just casually talking to the accountant. Accountant was telling me, sir, they are going to sell off the technology in the company. I said, which technology? The core technology of that software company they were planning to sell. I said, core technology they are going to sell means the going concern assumption will not be appropriate. Means the entity itself has to shut down. Now, then I confronted the director that I said, what is your future plan? He said, sir, we are going to sell off the technology, company is not going to continue in future. So I said, then your going concern assumption is questionable. It is definitely questionable. Then he said, "Arey, sir, leave it, sir. It is going to happen later. I'm going to sell off the company in next 3, 4 months. Why are you bothered now? You complete your audit." We put our foot down. We said, "This is nothing, some decision you have taken. Let me you please make a disclosure in the notes to accounts of the financial statement that you are in a talks with others to sell off the technology, or you have already entered into some interim agreement. At least let the reader know what is happening to the company. Company may be shut down." So it was definitely an unlisted public company, but there were like some 10, 15 shareholders were there. So they had to know that what the company is doing. So this is why, my dear soldiers, subsequent events plays a very, very important role. Procedure wise, one, first understand what procedure management is following to identify the subsequent events. The most powerful word in the world is awareness. Have awareness about things. Without understanding, don't comment on others. First, have a strong awareness. For that, first talk to the management. Okay, how are you going to identify the subsequent events? Next best thing are read the minutes of the meeting, of the shareholders, of the managing committee, of various committee, audit committee. Read the minutes of the meeting. Third one, read the subsequent interim financial statement, the first quarter financial statement, which will give you a lot of disclosure. Okay, and lastly, inquiring with the management, with those charged with governance. See, standards on auditing, they will teach us how an independent audit should be conducted. So for that purpose, we have these standards on auditing. Now, in a very interesting case, my dear soldiers, where SA 560 was extensively being applied, it was extensively being applied, my dear soldiers. How this it was extensively being applied, let us try to understand that. My dear soldiers, what happened is that you see this National Spot Exchange Limited (NSCL) scam. NSCL scam, my dear soldiers, you have this person Jignesh Shah. Jignesh Shah, basically, he is the like owner of this particular Spot Exchange Limited. Now, what is Spot Exchange Limited? Here, what happens? The commodity trading will happen. Any commodity trading to be done, it is done through this Spot Exchange. What happened in this case? I'll just make you understand. Take example of a situation. You have a agriculturist. Suppose there is an agriculturist. Now, the agriculturist, what he does, he grows the agriculture crop, and what he will do, 90% of people, what they will do, they'll sell off the agriculture produce in the market. They'll just sell off. They'll purchase, they'll grow, and they'll sell off in the market, like what you call mandis and markets. You will sell off. That is what the agriculturist will do. The second thing, what suppose an agriculturist will do, he will once he produces the agriculture produce, he will go to commodity markets like National Spot Exchange Limited, where they will have a warehouse. They will tell, see, boss, I have like say 100 tons of rice. So 100 tons of rice I have. So I want to keep in your warehouse. Sir, why is he keeping that rice in the warehouse? What is his intention? His intention, my dear soldiers, of keeping the rice in warehouse is that he is waiting for a better price. So he said the price of the commodity will increase. When the price of the commodity will increase, I will take the rice and sell it off. So he goes to NSCL. He says, I want to keep this commodity, say 100 kg rice or 100 tons of rice. I want to keep it. Against that, they will issue a warehouse receipt. A warehouse receipt will be issued. This warehouse receipt, my dear soldiers, what he does, he goes to the bank, he keeps the warehouse receipt with the bank, he takes a loan from the bank. Now, warehouse receipt acts as a security. So, if this particular agriculturist default, the bank can go to NSCL, show the warehouse receipt, and take the 100 tons of rice. That is how it works. So, now what happens? This is the second option. The second option, now, once, for example, say the agriculturist has got some money, he will repay the loan to the bank, take the warehouse receipt, go to the NSCL, give the warehouse receipt to them, take the 100 tons of rice and sell in the open market. This is how he can do it in the second scenario. And the third scenario, my dear soldiers, third scenario is what? Third scenario, it comes like this. The third scenario is like this, my dear soldiers. The agriculturist produces 100 tons of rice. He goes to NSCL. He says that, okay, I'll keep the rice with you. You give me warehouse receipt. They'll issue a warehouse receipt to him. What agriculturist will do? He will sell off the warehouse receipt to a broker. To a broker, he will sell off the warehouse receipt and he will collect his money. The broker is attached to NSCL. Now the broker will start trading that warehouse receipt. He'll start trading. He will sell the warehouse receipt to investor one, then investor two, then investor three. Trade, 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 trade. So he does the trading with various investors. They will like say purchase the warehouse receipt, buy, sell. Just like the securities in the stock exchange, like shares, listed debentures. How it is done. Same way this warehouse receipt is traded. Now what happens? Suddenly one person says, no, I don't want to sell it further. There's an investor. Investor says, now I want to encash this warehouse receipt. He holds the warehouse receipt. He goes to NSCL. He gives the warehouse receipt and takes the 100 tons of rice. Who is the original seller? The original seller, my dear soldier, is the agriculturist. And who is the buyer, my dear soldiers? The buyer is this particular investor. Do they know? They don't know. They don't know each other. So that is commodity market. NSCL acts like a broker, like an agent, where seller will meet the buyer. It's like your Ola and Uber. Ola and Uber are like a Swiggy. Swiggy will connect the restaurant to the customer. Similarly, Ola and Uber will connect the service provider and the person who wants this kind of services. It's the same concept here actually. He stands in the center and he connects the agriculturist to the investor. Agriculturist got the money. He does not know who bought it finally. Investor also, he got the 100 tons of rice. Everybody is happy. This is how the activity was done in NSCL. This is the way the activity was done. Now, what happened? There was a charge, an accusation that fake warehouse receipts were generated. Fake warehouse receipts were generated, and what do you mean by fake warehouse receipt, sir? Fake warehouse receipt means what happens, soldiers? There is no commodity kept. You're not having any kind of commodity which is kept, and what you're doing is that there nothing is kept with you. Actually, nothing, no commodity is kept. Actually, that's it. You just generate the fake warehouse receipt and issue to the public. Now, what happens? The trading starts in this manner. Trading goes on actually here. And now, my dear soldiers, what happened? There were almost like say 5,700 investors. 5,700 investors, my dear soldiers. They said that, see, what is this? They invested the money. One of the person went to NSCL to encash. Okay, let me take the commodity. When he presented the fake warehouse receipt, it was not accepted. It was not accepted, my dear soldiers. So now what happened? This became a real challenge, actually, a real scenario altogether. The warehouse receipts were taken, another thing. What will you do, actually? So now they did not get the commodity. Commodity they did not get. And I think not 5,700, but I think 1,700 investors were there who lost, like say, who were totally struck, actually. And almost there was a scam of 5,000 crore plus. 5,000 crore plus of like say fake warehouse receipts was issued. So now what will you do actually? How will you deal with this actually? Where is the transparency, my dear soldiers? What is the transparency this stock exchange is having? So they are printing, and they are giving. Complaint was made. Complaint was made to Forward Market Commission. Now, Forward Market Commission, my dear soldiers, they said, okay, complaint is being made. Once the complaint was made to Forward Market Commission, Forward Market Commission is like a regulator for, like, say, these kind of markets, commodity market. And the Jignesh Shah was the main key player. He was arrested. He was questioned that, see, because the commodity available in NSCL was warehouse was hardly 500 crores, but they issued for like say 6,000 crores. There's a huge gap of 5,500 crores. huge gap. I mean, so many people lost their money. They just lost it. That's it. Now, so what happened? The auditor, what they had done, the auditor had issued an unqualified report. He had already issued, but the audit report and the financial statement has to be adopted by the shareholders. Only that part was pending. It has to be adopted by shareholders. Only that part alone was pending. So this is how the scenario opened up. Only that part was pending. Everything was all right. Only that part was pending. Only adoption was pending. So now they were totally shocked. The auditors were shocked. See, I give an unmodified report under SA 700. Unmodified report means there is no material misstatement, sufficient and appropriate audit evidence is available, and all uncorrected misstatements are rectified. If uncorrected misstatements are not rectified, they are not material. So, for me to give an unmodified report, which is nothing but a good report, my dear soldiers, I require I require a sufficient and appropriate audit evidence. Auditor already gave a thumbs up, thumbs up. It's a good company. They mentioned it. But after they issued the audit report, before the shareholders could adopt, see, once the shareholder will adopt the financial statement, it is locked. It is locked. You can't do anything about it. Nothing can be done about it, my dear soldiers. Nothing can be done. It is then it becomes your liability. And tomorrow the shareholder will raise a question: is a fraud of 5,500 crore? You're liable. So immediately what happened? Auditor quoted 560. They referred to 560. You should go and check articles on this, like say of NSCL scam. You'll find a lot of articles on SA 560. They quoted SA 560 that yes, after the issue of audit report, but before it is adopted, we have some issues which are coming up. So that case, as an auditor, what we should do, we should discuss the matter with the management and those charged with governance. We should also see that whether financial statement has to be amended, and we should check that okay whether any amendment of financial statement is required, and how the management is dealing with such kind of matters. This is a huge fraud. As on the balance sheet date, they were not aware of the fraud, but after the balance sheet date, they came to know huge amount of fraud which has happened. Immediately, the auditors withdrew their report. They said that we can't go ahead with this actually. So they completely withdrew the report. They said no. Had this look at this, we should not only be alert till March, but we should be alert till the date when the shareholders adopt the financial statement. See, it's like a thriller of a movie. Tomorrow AGM is there to adopt the accounts. Today auditor said no, don't rely on that report. I'm withdrawing my audit report. Sir, can an auditor withdraw the audit report before adoption any number of times? He can withdraw, he can amend the audit report. He has to give reason, and he has to bring to the attention of the shareholders that why he is withdrawing the report. Finally, my dear soldiers, this was one savior for the auditors. SA 560 saved the auditor. I always tell students that don't neglect the principles and standards on auditing, not only to students, to other professional chartered accountants also, because it acts like a bodyguard for you. Okay, if you have done the audit as per standards on auditing, nobody will question you. Okay, these are the things. Now, what are the specific inquiry an auditor has to do? But before that, I already highlighted that once you think that there's an amendment to the audit report to be done, then please discuss the matter with the management and those charged with governance. Think that whether financial statement has to be amended. The management cannot tell you that you should not revise the auditor's report. It is your property. They cannot dictate terms to you. You have to take a decision. Okay, you need to take a decision in this regard. That's the one thing actually. And another thing, my dear soldiers, is that whether the financial statements, like say any financial statement which has to be amended, so those kind of things you should be highlighting it. Okay. Next one, my dear soldiers, what are the other things you should keep in mind? Then there are certain inquiries you should do with the management. For example, suppose say whether any asset has been destroyed after the financial statement date, after the date of whether any asset got destroyed, then we should be highlighting it. mention of. Similarly, whether any asset has been appropriated by the government. Appropriated means whether that asset has been taken over by the government. So whether such kind of situation has happened. So you have to be very curious whether any commitments or any borrowings, whether any complex accounting adjustments are there. So you need to raise these questions. These questions has to be done actually here. Further, my dear soldiers, also as a auditor, we should see the appropriateness of accounting policy, and whether any sale of asset has happened, disposal of asset has happened, destruction of asset has happened, appropriation of asset by government has happened, contingencies and commitments are coming into picture. So all these factors, queries you have to raise with the management. You need to raise all these kind of queries. Okay. So, and look at to the response. Listen to everybody from a junior accountant to the senior accountant. Listen to every person and understand that what are the perspectives they are going through, and how, whether it has to be, whether an adjustment has to be done to the financial statement, or whether a disclosure has to be done in the financial statement. As I told you, in the COVID situation, please focus more on accounts receivable. Receivable has become a very big problem, very big problem for everybody. In every balance sheet, if they have a huge amount of receivable and the money is not coming, it may also affect the going concern of that entity. So that is why we have audit procedures, like say in one case, like for example, when I was doing articleship, my sir used to tell, okay, we have to obtain confirmation. Some of the customers, we could not obtain the confirmation. So I was like, I told sir, we did not obtain the confirmation. So I was also sad that sir, they are not responding. Some people will be there. If you ask 10 times also, they'll not respond. And the boss will tell what work you have done, another thing. So you get stuck between, like, say, a rock and a hard surface. You get stuck between, like, say, a snake and an alligator in between. So you're in between. Articles, life is very challenging. It's not easy. If you try to tell the boss, sir, client is not responding, boss will say, no, you have to do the work. Finally, what happened? We were not able to obtain some major confirmations. Then boss said, okay, see the subsequent realization from these customers. See the subsequent realization. Similarly, see the subsequent payments which have been done to these suppliers after the date of financial statement. So there also we are having an element of what? Subsequent events. Okay. So whether after the balance sheet date have I realized the money, and whether we have made payments have been done to suppliers after the date of financial statement. So, my dear soldiers, to summarize this one thing, that subsequent events, one is that it is a responsibility of management to identify, to disclose the subsequent events. You as an auditor should obtain SAI, that is sufficient and appropriate audit evidence about the subsequent events. That subsequent events, if they require any adjustments, whether those adjustments are affected, if it requires any disclosure, then that disclosure is properly given. And then respond appropriately, that any amendment has to be done to the audit report. And audit report, I highlighted that it can be amended before the date where a shareholder adopts the financial statement. Further, two types of events: adjusting events and non-adjusting events. Adjusting events provides evidence that the condition existed as on the date of financial statement. And whereas non-adjusting events, the condition arose after the date of financial statement. Adjusting events make past entries in the financial statement, make a disclosure, make adjustments in the financial statement. Non-adjusting events just make a disclosure. As an auditor, what procedure you will apply? First, understand what is the procedure they follow to identify subsequent events. See the minutes of the meeting. See the subsequent interim financial statement, and also inquire with the management. What do you inquire? Inquire whether asset has been destroyed, asset has been appropriated by the government, asset has been disposed of, asset has been acquired, any contingencies, commitments, increase in capital, debts, okay, or any complex accounting adjustments have been done. These kind of scenarios you have to follow. Okay, fine, my dear soldiers. So this is how we understand about the entire aspects which are related to the subsequent events. Okay, I hope you are clear with the concept actually here. Yes, yes, sir.
Yeah. Thank you so much, sir. Thank you for your valuable time for our students. Tomorrow also we are having session emerging opportunities for fresh chartered accountant. Our premier alumni, Mr. Srinivasan sir. Interesting fact about Srinivasan sir is he was the chief manager in State Bank, and he has resigned the job before just before retirement. He has joined CA course. He has completed the CA course. Now he is a practicing chartered accountant. He is going to address tomorrow, 5 o'clock to 5:30, emerging opportunity for fresh chartered accountant. Kindly watch all of us tomorrow. We can meet 5 o'clock. Once again, sincere thanks to Vikas Oswal, sir. Thank you so much, sir.
Thank you very much, Hari sir, and opportunity to associate with you is really a great pleasure, sir. And I'm very happy that I had to see you after so many months, sir. Huh?
Okay.
Thank you very much, sir. Actually, thank you very much.
Thank you, sir. Thank you, sir. Bye bye.
Bye, sir. Bye, sir.